Alright, welcome to a brand new video, guys. Most of you guys know me on Discord as Zeroh, and thank you for taking time out of your day to come and watch this video and hopefully better yourself as a trader. I hope to do my best in providing the value that I think I can provide to you guys, and hope that you guys can come out of this video a little bit more knowledgeable or with a little bit different perspective than you did coming into it, and hopefully you can apply that to your trading and improve. And I love seeing that stuff, right? I get a lot of satisfaction from trying to help others, and along the way also help myself, right? I think teaching trading is another great way of further helping or further bettering your own understanding of it, right? That's part of the reason why I've previously made videos on trading, because I feel like in the process of making those videos, I myself also improved as a trader, because I was better able to understand the concepts that made me, or that brought me, personal success. So hopefully I can do that for you guys, and help myself also and help you guys, and just overall grow together as traders. That's really what I want deep down. But anyways, there was two main topics I wanted to cover on, and this video is going to be a little bit longer than the rest. So far I've only posted super scalping videos on this channel, so this one's going to be a little bit longer, so just a heads up. But I do think there's going to be some good value, so hopefully stick to the end, and let's learn together. So the first thing I wanted to talk about was the concept of discretion, right? Because most of us that are trading are definitely have some sort of discretion in our trading. And I was listening to a podcast recently. I think it was last weekend or one of these days, and he was mentioning the fact that you should earn the right to be more discretionary in your trading. And I thought about that for a while, because I don't know, it stuck with me, and I was like, yeah, that actually makes a lot of sense. Because as a beginner trader, your discretion isn't going to be as trained as somebody that has been doing this for a long time and is experienced, right? So it actually might not, for a profitable trader, that personal discretion is what pushes them from being a good trader to being a great trader and even an elite trader. But for a beginner whose discretion isn't necessarily trained to be that great, right? And discretion is built off experience and screen time and practice and repetition. So obviously it's common sense that as a beginner, your discretion is going to be levels below what it might be for an elite trader. So when an elite trader is giving tips to a beginner trader, it might actually be hurtful if he's recommending him to be discretionary, because that beginner just doesn't have that experience to be discretionary. Does that make sense? Hopefully that makes sense. And so I was thinking about that, and I was like, okay, so what would you recommend to a beginner? And for a beginner, there's three main things you got to focus on. Number one, and this will always be number one, capital preservation, right? The whole goal as a beginner is to stay in the game long enough to learn enough to the point to where you can start to be profitable. And I've touched on this before in previous videos I've made, but that's very key. Capital preservation is your number one top priority as a beginner trader, as a just turned profitable trader, as your first years. Capital preservation. Don't focus on those Lambos, the $1 million people posting $10,000 trades plus. Cut that shit out, right? That's why hopping on Twitter can be a little bit hurtful. Hopping on YouTube, these furus or whatever people want to call them, it can be hurtful, because although it can serve as some sort of motivation, and I can fall victim of, or I can not victim, I can be, be blamed for this as well. I've posted my results before in certain Discords and stuff, and so I can see how that may have been hurtful to what I'm trying to explain here. But yeah, so you shouldn't be trying to focus on, you can use that as motivation. And definitely for me, when I was in the early stages, I wasn't, I started off trading with $100, believe it or not. I was 17 years old, and I opened up my first Robinhood account, and I deposited $50 in it. And the first ever trade I took was on a crypto coin. It was either Bitcoin or Ethereum. I bought .0000001 of it, and because I only had $50 in it, and I saw my position moving by a couple cents, and believe it or not, that was enough to get me hooked on this. And ever since that day, the markets have become my life. But anyways, that's kind of like getting off the main point here. But yeah, capital preservation is your number one focus as the first couple years, let's say. The second thing that's important is keep it simple, right? There's obviously a lot of nuances that come with trading, but you want to try to keep your strategy as simple as possible. Obviously, eventually, you want to get more nuanced with it, start adding that discretion to it, start finding ways to optimize your potential edge, right? And there's many different ways to do this. You can start looking at different markets, different strategies. Maybe you're really good at trading trends, but you want to get better at trading consolidation as well, because those days are more common. You want to get better at trading different products. Maybe right now you're only trading futures. You want to get good at options because that can help further your edge. But as a beginner, you don't want to be doing all that stuff. You want to keep it simple and become a master of a singular strategy, right? What you feel the most comfortable with, and yeah, and so you want to keep it simple, right? And that's why a lot of people recommend just finding that one setup, that one thing that really sticks with you and that you think you can optimize it the best, right? And there's like a quote, I'm not scared of the boxer that practices 1,000 different kicks, but the the fighter that practices one kick 1,000 times, right? It's basically that concept that we're thinking about right now. So that's number one. Number two, and number three, you want to find something that isn't necessarily yielding consistent results yet, but you want to find, or you want to build, is a better word, a process that is repeatable, that is consistent, that gives you some sort of consistency. Because in trading, there's a lot of things that we cannot control. We cannot control where the market's going to go. We cannot learn to know where the market's going to go. But there is certain things we can control. For example, we can control our risk. We can control sort of our reasoning into why we're going into trades, the type of trades we're going into, the type of time we trade in the market, how many trades we're taking on an average, right? All the variables that you can control, right? Coming into the market in the right mood. It sounds like it's not important, but that can be important to you. Using the same size on every trade. Stuff like that, right? So you want to find, or you want to start building a process to your trading that is repeatable, is consistent, because you won't know if you have an edge if you're trying out a whole bunch of different things. Some days you're green, some days you're red, and you don't know what's going on and you can't know what's working for you or what's not, because there's no consistency. How are you gonna start building something that will eventually yield consistent results if you don't know what's causing stuff to work and what's causing stuff not to work, right? And that's where it's important to start journaling, become introspective, tracking your results, tracking your stats, looking at that, doing daily reviews, weekly reviews, monthly reviews. And you want to find that stuff that is your strengths and start doing more of that and cutting out the stuff that's not working out. But in order to facilitate that, there has to be some sort of consistency, right? And not in the results, because we cannot control that, but in the variables that we can control, find consistency. So those are the top 3 things that should be your main priority and focus as a beginner, developing, and just turned profitable trader. Okay, that's the first point I wanted to get through. And again, different advice is going to apply to different people differently, because again, trading is extremely nuanced, and that advice I just gave you is going to contradict a little bit to the advice I might give to an elite trader, right? It's going to be a little bit different because an elite trader is going to now have earned that right to be discretionary with his trading, with which a beginner trader isn't allowed. Okay, there obviously will still be discretion in your trading, but not as much. For example, me personally, I vary my like if you go back to those scalping videos, you can see that in some positions or in some trades I'm in with 9 contracts. In some positions I'm only in, I never add to the position, I'm just 3 contracts. Why is that the case? I can't really explain it. It's just discretion, right? I like to trade a little bit better. What made me like to trade a little bit better? I try to explain in the video, but ultimately it's discretion, right? That I've earned, or I think I've earned over my years of trading. There's certain trades where I move to take profit. Should I be doing that? Should a beginner be doing that? No, just take the base hit. But as somebody that's been trading for a long time, I have the feel, right? And it sounds weird, like how does he know how to feel it? Well, I don't know. I've spent the last 4 years staring at charts every single day for multiple hours. That's why. I don't know. I could actually try to explain it. Like there's certain little reasons why that I am conscious about, but some of it is unconscious, right? Or subconscious, whatever. So yeah, so those sort of little things I do in the videos you'll see in super scalping. I don't necessarily recommend that to a beginner trader, but to an elite trader to further his edge, go ahead, right? It obviously yielded positive results, and that's the main reason I was profitable in those super scalping videos, and I'll continue to do that because it's what works for me. But it's not necessarily what I would recommend to a complete beginner, right? Does that make sense? Hopefully that makes sense. All right, the next thing I want to talk about was great entry points. And give me a second because I'm going to take a little sip of water here. Okay, so great entry points. So our job as traders here is not to predict where the market's going to go. And that's different. So let me phrase that correctly, because yes, we do have to have a game plan. We do have to have a certain hypothesis. I think this will happen. Why is that important? Because you cannot execute a trade if you don't believe it's going to work out. Does that make sense? Like, especially as an elite trader who has to put on some bigger size, how is it possible that I'm going to be coming into a trade risking $5,000 if I don't believe the trade's going to work out, right? That's just not possible. And that's where like the tricky part, the mental part of trading comes into play, because it's like, well, I wouldn't just throw away, burn $5,000. Like, you know, I'm even like cheap about like buying certain stuff in real life. Like I still check prices about certain stuff, even though I'm okay with risking $5,000 on a trade, right? Like, all right, but why am I okay risking $5,000 in a trade? Because I believe it will work out. Not necessarily that one trade, but in the next 50 trades, I have a strong belief that I will make money, right? Okay, so you have to have a strong belief in that. And I also watched this in a recent video, but that doesn't necessarily mean I know the next trade will work. I don't know. And how can I be okay with that? Well, confidence. And how do you gain confidence? By proving it to yourself that it works in the long run. And even as an elite trader, we won't always have confidence. There will be periods where I have low confidence, and there will be periods where I have extreme high confidence, where I'm just like every day on a roll, and people will be like, holy shit, you're a wizard. Like I've gotten that comment before, you're a wizard. And I'm like, I just laugh when I see the comments like that, because it's like, oh, you don't even know, bro. You don't understand the pain behind that led up to this point, right? You don't understand that, okay, I'm a wizard today, but at the end of the day, I'm only as good as my last trade. And there will come a point where I will enter a drawdown. I've been performing exceptionally well recently, but there will come a point where I enter drawdown. I know it's inevitable, and I won't feel like a wizard. I'll feel like a complete dumbass. I'll feel like I'm not going to use the more extreme word, but I will, okay? And okay, that's not the point of this video. I'm not going to explain how to get out of that and stuff, but my point with this was you have to have some sort of belief to execute, right? And actually, that wasn't even the point. The point was great entry points, how to spot great entry points. So I don't even know how I got to this point, but I don't think it was necessarily a bad tangent that we went on there. But going back to the main focus, I want to talk about the two main topics. Great entry points, right? How do you find great entry points? Now I'm kind of lost in this video. Okay, give me a second. Let me regather my thoughts here. I'm sorry, I haven't made videos in a long time, and I didn't like write out a script for this video, which I probably should have. But let me know if you guys just enjoy me talking and just letting you guys pick my brain, basically. Okay, so great entry points. Okay. I was explaining the role of a great trader, right? Our role as traders is not to predict what's going to happen, and that's where the whole belief thing came into play. Okay. I'm back on track. Okay, yeah. So our role is not to predict what's going to happen, but at the same time, you have to build a hypothesis, right? But while we do have a strong belief, you also have to be agile. I don't know if that's the correct term. You have to be willing to adapt. You have to be perfect way to explain it. You have to be willing to accept that you're wrong. Okay, very key. You have to be willing to accept that you're wrong. And that can be a little tricky, even for me, especially in those times when I'm extremely confident. You sometimes, and this is why sometimes having big wins can lead to big losses, because you start to feel like, oh, I am a wizard. Like, yeah, you're right. I'm getting these comments telling me I'm a wizard. I'm predicting the market. I'm on a roll. Yeah, of course I am. I'm a great trader. What are you talking about? And so you start to believe that you start to believe a little bit too much, that you can start knowing where the market's going to go, right? And that's where stuff can get really bad, because that can start leading you to stop respecting your risk, your stop losses, your daily max loss, and that's where you can start getting into trouble. Start over leveraging, and all this stuff that's bad stuff that you need to avoid. And that's why we have rules in place, right? But going back to my point, so you have to have a hypothesis, but you have to be willing. You have to be really willing to accept that it might not work out. But the important part in building the hypothesis is that you have to build one where two things are true. One, there's limited risk, and you have to know there has to be a reason for that risk. For example, we have this chart pulled up here. This was Friday's action here. Let's say we went short here, right? We all agree that's a great entry, right? But why is it a great entry? It's a great entry because after you enter, there's very minimal drawdown. But that won't necessarily always be the case. For example, let me ask you this. Is this a great entry for the short? Why or why not? I paused intentionally to let you think about it a little bit. Okay, well, obviously, in hindsight, there's a pullback. But we didn't know that. When we entered, we saw that. And let me show you this. Look at this. Look where price ended up. Well, if you just held that, how much money would you have made? 100 points. That's a great trade on NQ right there, right? 100 points, one contract times 20. What is that? $2,000. I just made $2,000. What are you talking about? Bad trade. That's a great trade. Was it though? I mean, again, in hindsight, sure it was. The drawdown I took on it was only 30 points. I made 100 points. Okay, but if you entered there and you went through the stress of holding down 30 points, how come you didn't take profit when you were up 30 points? Ooh, that's an interesting question, right? Let's say we didn't know the hindsight. Because a lot of times, the losses will affect us a lot more than the wins. Right? Even if it's a small loss, the simple fact that we were wrong can really hurt our ego as traders here. Again, even if it's a small loss, maybe like sometimes I'll be on like a 10 trade win streak and then I hit that one losing trade and it's like it doesn't matter in the long run, but it's like, fuck, I just lost my win streak. And it's like, okay, be happy the fact that you were on a 10 win streak. I can't. I'm focused on the fact that I lost one trade. Why? Why does it hurt us so much? So sometimes when we're in that trade, in hindsight, we're like, yeah, it was easy to hold. It's only 30-point drawdown to make 100 points. Yeah, I'll hold that trade. Would you really? Like, if you were really in that position, would you? Like, be honest with yourself. And after holding for a 30-point drawdown, you're going to really be tempted to sell once you're up 30 points, especially if you've been in the game for a while and you've experienced this before. You enter here, it goes against you 30 points, then it goes for you 30 points, and then it goes back. Now what do you do? And you have to be honest with yourself. If it goes back to your entry, what do you do now? Did you move your stop to break even? Are you going to let it go back, draw down 30 points, and then you're going to be like, what do I do now? I was in this position before, and I got away with it, so let's add to the position, or, just keep on holding it. What if it goes another 30 points? Now what? Okay. That right there is why you have to have a game plan. But there's a difference. There's a difference between just having a game plan and having a good game plan. A good game plan is one where you are ready for every single one of those situations to happen. And that's what goes into the preparation for a good entry point. So you need that preparation beforehand to get you ready to take a great entry, okay? Because again, we're not predicting what's going to happen, but we're readying ourselves so that whatever happens, we're ready for it. Here's another thing with great entries. Let's go back to this one. You want to position yourself in points with limited risk, which we talked about, and with the potential for big reward. Common sense, right? Risk reward. Okay, how do you know the reward's going to be good? That's where understanding setups, and that's where these patterns, supply and demand, come into play. A lot of people love technical analysis. They'll die by it. They'll be like, yes. And I've also found people that somehow, or I'm not going to say somehow, I found people that say technical analysis doesn't work because it doesn't work for them. Personally, and at the end of the day, this is just my personal opinion. It's not necessarily a fact. Technical analysis is very key in my personal trading to finding great entry points. Because to me, what technical analysis means is I'm identifying. Okay, it's hard to explain this one. For me, what technical analysis does for me is it allows me to understand how a good market for me is going to act. Okay? Pause the video and try to understand what I just said. I hope I have put it well enough in words for it to be understandable. But I'm saying that the market will repeat itself in patterns. And I've seen people notice this before where it's like, oh, this action was pretty similar to what happened this day before. Okay, yes, good observation. How do you use that to your advantage? You want to train yourself to see patterns, but in a way that you can position yourself early enough to capitalize on it. Does that make sense? So there was a big recent trade I took recently. This short right here, and you might not believe that this was my entry. I've posted it several times on Discord, my exact entries. You can go back, go to the Discord server. The one I posted in is I'll have the link for it in the description down below. It's called iMan Trading, and you can do Control F, search Zeroh, that's my username, and go back through all my messages, and you'll see my entries and whatever for this particular. But the trade I caught was this. Now, I didn't hold all my contracts to this level, but I caught something like this. about 600 points. 600 points exactly, actually, on my final two contracts, believe it or not. And my risk was like 40 points. My entry's a little bit higher. Okay, I'm not gonna draw it like that, but that's what I caught, right? Call BS, call whatever. Okay, that's the trade I caught. How? Why? What was the reasoning behind this? It's a continuation trade. Okay. What does that mean? Okay, using technical analysis here, this is what I'm saying. This is my hypothesis on the trade. Charts going down will continue to go down. That's my hypothesis, okay? Do you agree with that? Maybe not. Let's zoom out here. Let's just see what I'm talking about. Let's go here. After a strong move up, you get this first push down, then eventually you get that bounce. And sometimes you'll get that second leg down. Now, the first leg is pretty tricky to catch because you have months where you're conditioning yourself to buy the dip. And then eventually it's like, oh, you don't want to buy the dip no more. But it's hard to catch this one. You can still catch it. If you're a great trader, you'll catch this. You'll catch definitely a portion. I mean, there's plenty to catch here. But the trade I really like is the second leg. Why do I like it? Because it's more easier to predict. Same thing to an upside trade. Conditioned to sell the bounces, and then all of a sudden you're not. And then you get that leg up, you get the pullback, and then you get the second leg. And look how clean the second leg was. So much opportunity, right? And this is on high time frames. This happens on lower time frames too. So that's what I'm saying, right? That's my technical analysis. Go short. Eventually, there's going to be a bounce. You short that bounce, and you catch that leg down. That's what technical analysis allows me to. That's what my years of studying charts tells me, that if a new trend starts, there will eventually be a good second entry point on those ones that end up working out really well. And my job is to catch on that bounce. So that's what I did. Let's go 4 hour now. We get that first leg down. Then we get that first big bounce. So I short it. And we catch this. That's what technical analysis allows me to see. And then going in closer, okay? Because you don't want to just... okay, if I short here, that's not a good entry. If I short here, in hindsight, that's not a good entry. So why did I choose this entry? Okay, actually, my first entry was actually right here. And again, you can go back to my messages and see exactly where I entered, exactly where I got stopped out. At one point, I was up 100 plus points, and then I still got stopped out for a little loss, and then I re-entered. Let's go back to here. Why did I think this was it? Supply zones. I'm sure you've heard of that before. Previous support turned into resistance, turned into resistance again. So that's why I was looking at this zone as a potential destination zone for this bounce. Does that make sense? So that's what I use TA for. I use signal analysis to identify what a potential destination zone would be. How did I identify that? Simple. Previous price action has been here. It's been a price where it's been an area where price has consolidated, and previous support has turned into resistance before. So I think it could potentially be a destination zone. Okay. That's what I use technical analysis for. And then how do I exactly pinpoint my entries? Price action. What do you mean by that? You see all these candles, really strong move up. The pace of it told me that I wasn't going to have to wait too long to get my short entry. And that we were going to be susceptible to or we were more likely to see this second leg down because of how quick this move happened. I like when it's quick because it's telling me shorts are getting out of this play, and I need that in order for this to happen. What do I mean by that? And this applies, this stuff that I'm talking about here is more for the longer term trades. So this was obviously a swing trade. I held it for multiple days, and you might not trade like this. So this advice might not necessarily apply to you, but hopefully you can still get like some little tips and hints here and some ideas out of this. So what I mean by I need the shorts to get out of this trade. Well, in order for a trade to work, you understand that if I go short here and I'm looking for this to happen, I need people to sell. How do charts move? There being an imbalance of buyers and sellers, right? Basic supply and demand. If everybody is short, and why would everybody already be short? Because of this first leg down. Everybody's short, right? People get late to the game. People are shorting here, shorting here, okay? At this point, there's so many shorts already piled up into this trade. So that's why we were susceptible to a bounce here, because too many people are already one-sided. It's like, I'm pretty sure you've seen that chart thingy that says fear, greed. It's like the speed gauge on your car. On the right side, it's like extreme greed, extreme fear, extreme greed, extreme fear, extreme greed, extreme fear. We were extreme fear. And if you're going to get a good position on a short, you can't have it be extreme greed. Extreme fear. Unless it's like the world's ending, right? Then it doesn't matter. Extreme fear could be negative 100 and it could still be a good entry for the short, right? But that's likely not going to be the case. That's exactly why Warren Buffett says be greedy when people are fearful, be fearful when people are greedy. Because if everybody's already agreeing on something, you don't have an edge. You don't have an edge. That's why sometimes you're like, well, if I just took the opposite trade that I'm taking, I would be making money. Why is that the case? Because what you think is a good trade is exactly what everybody else thinks is a good trade, and they're already in it. So how is it possibly going to be a good trade if everybody's already in that trade? You need people that are not in the trade to, sell. You need people to become fearful for your short to work. And if everybody's already fearful, it's not going to work. So that's why you need this bounce to happen. And if it happens fast, that's telling you shorts are exiting. This is not just buyers. All of a sudden, everybody didn't just agree that this is a good spot to buy. Somebody firstly agreed this candle, and then everybody's like, the shorts are like, shit, it's over. Fuck, time to buy. Oh, wait. Psych. Nothing changed. The trade is still to the short side. Okay, so it happened fast, quick. Okay. And these are all theories, obviously. At the end of the day, maybe that's not exactly what happened here. So I could be wrong, but that's how I interpret it. So it happened fast, and I like that. I like when it happens fast. It got to my destination zone, so I'm like, okay, good area to short. Once I start seeing price action shift a little bit, Once I saw these candles, and this could be like a chart pattern that people tell you to, and then the context added with it, I took a short somewhere here. And then it worked out a little bit, then I got stopped out. But I still like the idea, right? My idea is not completely invalidated yet. So I wait a little bit. We get this. I'm like, shit, maybe I missed out at this point. So that tells me when it's a big spike like that, it could easily be reversed because this was like on earnings. And it was still in my destination zone, and I was getting a better price than I was down here. So I said, okay, I'm willing to retry the entry point here. And as we saw weakness, I ended up entering somewhere here on this candle, and with my 40-point stop loss. And why was I willing to have a wide stop loss? Because my target was all the way down here. Why was my target all the way down here? That's another destination zone. Why is it a destination zone? Simple. Technical analysis. Supply zone. Demand zone. Why is it demand zone? Because you have two little points here. Simple as that. That's why. That's why I chose this as a destination zone. Really, that's why. All right. Cool. Hopefully this is all making sense. I'm talking a lot here. How long has this video? 34 minutes. Fuck. Okay. thank you if you're watching this. I'm sorry if it's nonsense, but hopefully there's some good stuff here. I think the initial 15 minutes were really good. Then when I started rambling about all this stuff, I don't know if it's helpful at all, but hopefully it is. Anyways, so I got my entry there, and I obviously didn't hold all my contracts to the bottom, but I sized out along the way, and I got my trade. But going back to what makes a good trade, limited risk and the potential for a big reward. Hopefully I explained it well enough why I thought there was potential for this big. And again, I didn't know this was going to happen, but I had a theory that it might happen. And why did I think it might happen? Because of the stuff I explained back here. And why did I like my entry exactly there? I can't explain it too much. Destination zone for the longs happened really fast to move up, so I thought, okay, bears are still this. Oh, here's another thing why I like the entry here. At least to me, these two things here are telling me that the shorts are not done. Why? Look how aggressive they're being. They're selling that. There's sellers still here. They're not. The bears aren't full yet. They still have a strong appetite. They haven't been entirely successful at breaking us down, but they're there. So when we get this push up, I know that they're not done yet. This was like a stop loss run for the bears. Like the bears that were shorting here, whoever this was, they got stopped out here, but they're gonna want to re-enter eventually. Look, they come back in. They get aggressive again, and then new people start adding to the trade. Once the people that got excited here, they're like, oh, it's over. Let's go long here. Then they got stopped out over here. That's most of the traders. And then people are looking for the bounce. Guys, it's a good buy down here. We're down 200 points. Let's buy. Oh shit, we're wrong. Stop out. Right? Hopefully that makes sense. I don't know. But here's the easier example to illustrate, okay? And this one was actually in the Discord. So let me scroll up here a little bit. And I explained this a little bit earlier, so maybe I don't even have to explain it myself. So let's read through this here, because I think there's some good knowledge here to be learned. What's the first message here? So this user, shout out to you, was asking a question. Since I'm struggling to find an edge, I'm wondering if it is related to my prior education on technical analysis and candlestick patterns. For those that trade on intuition, should I attempt to remove those dots while trying to trade? Iman's videos and others refer to the fact that most of these ways of reading the chart have no direct correlation to how the market will actually move. Considering the fact that I tried to enter trades based on candlestick patterns, I see but being stopped out, failed results confirm my previous point. Curious on others' point of view. So he's basically saying that he's tried candlestick patterns and stuff and it hasn't worked out for him. I disagree with that. I think candlestick patterns can work, but not necessarily on their own. It has to be one, the right candlestick pattern and in the right context, and you have to trade it correctly. There's a way where you can trade a candlestick pattern and it's working, but you're not trading it correctly. Let me give you an example. One candlestick pattern that I like to trade is called the H pattern. What's the H pattern? It's, let me draw it out actually, because it's easier if I draw it out. It's when the chart does this. An H. Let me give you an example to make more sense. You got your top here, you got your bounce, and you got it start turning around, and then you got the H and it extends further, obviously. That's the H pattern. You agree that you can make money trading this, right? It's a simple candlestick pattern. When you see an H, you go short. But there's additional questions to that. where do I go short? When do I take the H pattern? Because the H pattern will appear and you won't always want to take it. So why in this case was this H pattern good? I'll give you 3 reasons why. So we talked about how trends work, right? That's the trend, right? Similar to an H pattern. Interesting. So you got your high here. You got your low here. And we want to take a short somewhere here. Where would you put your stop loss there? Hopefully I've explained it already enough why you would put your stop loss there, because if you push up here, the trend is invalidated, at least short term. It could be the case where it does this, stops everybody out, and then it comes back down. It's tricky like that sometimes. And there's no reason not to re-enter on that trade. If it does that, re-enter. Sometimes, depending on the context. There's also market internals you want to be looking at, and other stuff, and volume, and the price action of the candles, like every tick by tick, how is it acting? Is any big buyer coming in? Stuff like that. It's complicated, right? But so you got your stop loss here, and then where would you put your take profit? Well, your first take profit at the minimum will be right here. But ideally, you're trading at least 2 contracts, so you can sell 1 contract here and let the other one work out, because look at the way more points here you could have got. And I'm not saying you're going to execute exactly at the bottom, but you had a potential to catch 126 points, risking only like 20 points, okay? So this particular H pattern was nice because it bounced 50%. What do I mean by that? So here you have, okay, let me erase that. Here you have your top, here you have your bottom, then you have a bounce. And this bounce, this is halfway point. It bounced higher than 50%. It retraced 50% of this. That's good, because when we enter that short position here, now our risk is less than the reward, right? That's a good thing, right? I'm pretty sure you would agree with that. Because if you win on this trade, you're going to make more than what you risked. That's what makes a good entry point. Okay, but where exactly would you take your entry point? Would you just, once it reaches 50% your entry? Not necessarily. You want to enter on the right side of the V. So once you start seeing that start turning around, that's where you want to make your entry. In this case, you see that wick, okay? You're starting to see that initial weakness, and then this candle confirms it. That's where you make your entry, somewhere on this candle here. And you can actually have an even tighter stop loss and put your stop loss there and be risking like 10 points or 5 points, whatever that is, right? And look at your potential reward. Does that make sense? So another reason I like this trade is because this is not when the trend is establishing. It's been established already. You have your high here. You have a low here, lower high, lower low. Kind of broke, and this is where I'm talking about where it gets tricky sometimes. Sometimes it breaks it just above, and then it just slaps it again, right? But the trend is to the downside. Clearly, before you take this trade, it's been established that we're to the downside, right? And another thing is the previous price action to this. Similarly to how I said the sellers are still present, sellers are still present. Sellers are present here. Look at this candle here. Nice aggressive candle. Nice aggressive candle here. Nice aggressive candle here. Nice aggressive candle here. You want to see stuff like that. Okay, and this is stuff you'll train yourself. Screen time. Okay, you'll start to realize that's good. That's good. If I'm looking to the short side, right? Obviously, that's good. I like that. And so you take your entry there. You can say that this is a trade on a candlestick pattern, right? What is the pattern? An H. Every time I see an H, I enter. Not every time, but I see an H, I pay attention. That's a better idea. Candlestick patterns, when you see them, you pay attention. Doesn't mean you necessarily always execute, but you want to pay attention. And with that experience of seeing things like this, clues, it being part of the trend, maybe using market internals. You see these little things I have up here, market internals, very key to my trading as well. volume, other stuff like that you can use, time and sales, flow, whatever you want to use. That can add context to the trade. And another key part is how you trade it, right? So let's say you take your entry there and you take profits here, all your profits. Sure, you might have made a little bit more than you risked, but if your win rate isn't much higher than 50%, you don't really have that much of an edge. It's just like an okay edge. But what will make this a great edge is managing the trade right, letting your winners run. And it won't always work out like this. But out of 50 trades, there will be I don't want to say at least, because that's saying that I know how many of them will work out like this, but there will be instances where this will work out really well, and that's when you have to capitalize. What makes good traders good is that when market is good for them, they capitalize. You cannot be a profitable trader if you do not capitalize when the trades you should be taking are not taken. Hopefully I worded that correctly. Okay, so you have to be taking the trades that are good for your strategy, and you have to execute them well. Okay, because it can be a fact that you're identifying this H pattern, but you're not executing it to its full potential, and you will never execute it perfectly to its extremely full potential. But this is where reviewing your trades, market replay, repetition, screen time will help. Because the more I've traded the H pattern, I don't know the exact amount, obviously, but way over 100 times. And you might be watching this video and then you're going to go try to trade the H pattern, and you're going to have 2 times you trade the H pattern, you're like, it doesn't work. Are you sure? I'm telling you right now, it works. It works. It made me a lot of money in this market. In this environment, it made me... Okay, that's another important thing. Environment. If we're in a clear uptrend overall in like the 4 hour, the H pattern ain't going to be that successful. But when it's good for you, I made a lot of money with the H pattern in these months, in this year. And in recent days, you can make a lot of money with the H pattern. That's where context matters, right? People can teach you the simple H pattern, but the context matters, right? But it works. It works. The pattern itself works if you know how to use it. That's the key part right there. But the pattern itself, by itself, I can't say it doesn't or does work. It depends how you execute it. Depends, how you take advantage of it. But my reason for entry sometimes is I see an H and I take it. And I trade it well, and that's how I make my money. Period. Okay? So this video is getting long, so I'm going to end it there. Hopefully I was clear enough. Sometimes I'm not the best at explaining stuff, but hopefully I explained it well. I think overall there was value in this video. I'm going to go over it, watch it a couple times, and see if I should post it if I find that these 40 minutes were worth your time. If you end up watching this and you're watching this right now, thank you so much for spending your time watching this video. Let me know what your takeaways from this video, if you were able to understand it, and any follow-up questions. I will be more than happy to answer them. And if there's any topics you want to cover, let me know. But that was my video. I hope I provided some sort of value to you guys, and let's continue on being great traders. Like I said again, if I didn't mention it already, I recommend you guys joining this server by iMan. I'll leave the link to it in the description down below. I think most of you guys will already be part of it, because I'm going to be posting this video and sharing it to the server primarily. So I'm sure most of these views will come from people in the server already. But if you're not already in it, link in the description down below. I recommend it. You can find me there. You can ask me questions. I'm there active every single day almost. I'm more than happy to answer any questions you have. It can be about this video. It can be about trades you've taken. If you're like, look at these past 10 trades I've taken. What do you think I did wrong? What I think, I'll be more than happy to give you my 2 cents on it and whatnot. But that's the end of this video. I'll catch you guys. The next video you'll see after this most likely going to be a super scalping session. If you guys also want me to record my normal sessions, I'm not saying I'm going to start recording all my normal sessions. I actually do live stream them already, but I don't share them to that many people. There's a select number of like friends and stuff and traders that I've been friends with for a long time that I share those videos with, that those live streams of me trading every single day with. But I think that there's a little bit too much sauce in those to be to be giving them out for free, so I don't want to do that. But little instances here and there, recording myself, I might be willing to share that with you guys for free. Like I'm always willing to help out for free, but there's just certain, like, I'm not gonna just give you everything for free, right? I think there's also some sort of value that comes from, I think the a part of the, what's it called, the not the passion, the fulfillment that comes from trading. Part of it is the struggle. That's what makes it so rewarding and fulfilling when you finally do start to see you know, what you sowed. What's the saying? Reap what you sow. I think that's the saying. I don't know, but you get fulfillment in the fact that it was such a struggle to become a profitable trader. And even once you reach that point of profitability, that's why I love trading, because the sky's the limit. You can continue to improve. I'm here, been trading for 4 years, been profitable for a majority of that, and I'm still grinding it out. Why? Because I love this stuff, because it's fulfilling, and you always find ways to improve and stuff like that. And now I also get some sort of satisfaction from teaching others and sharing whatever kind of knowledge I've acquired over the past couple of years. So I don't want to just give everything out to you guys. Like, I don't think there would be too much of a point of just sharing that out. And like I said, I think there's a little bit too much sauce in that. Like, it's a little bit too much information giving out to you guys for free. So I'm not gonna do that. I'm never gonna charge for that. I would never sell that. That's not what I'm suggesting, but I'm just saying that, like, you know, I'm just not willing to share that out, like just letting you guys watch me trade 24/7. I'm not gonna do that, but for little snippets here and there, the super scalping stuff, I'll share that with you guys for sure. And little moments here and there, I will. And I'm willing to make educational content for sure for you guys, when I can. But yeah, I've been rambling for the last 5 minutes for no reason, so I'm gonna end it here before I go even another 5 minutes. So thank you so much for watching again. It's been me, Zeroh. It's been my pleasure trying to provide value to you guys, and I'll catch you guys next time. Have a great rest of your day.